A local peak in gold is now imminent, TDS. The downturn in gold prices underscored by sharp liquidations from macro funds lined up exceptionally well with historical patterns surrounding drawdowns associated with macro fund liquidations from extreme levels, averaging between 7 to 10% over the last decade, TDS senior commodities strategist Daniel Gawley notes. Price action forces CTAs back into max long position size. However, the strong price action since was less typical, featuring a concurrent decline in open interest in COMEX gold, despite with few directional money manager shorts after accounting for EFPs, continued divestment from ETFs in the West and in China, alongside a notable change in trading behavior from Shanghai traders over the last weeks. We now expect imminent buying exhaustion. Safe haven demand associated with Russia's ballistic missile launch has hit the tape, supporting prices further than would otherwise be the case, but will likely have to reverse in the near term. From a macro perspective, the Fed's discounted path is no longer likely to lead to an overly easy policy stance, suggesting that macro fund interest is unlikely to return towards extreme levels. Price action has finally been sufficiently strong to force CTAs back into an effective max long position size, suggesting that every single trend signal on our radar is already pointing long, which will in turn cap subsequent algo buying activity. And the TINA trade is still reversing in China, suggesting that Asian demand won't save the day. The setup for flows in silver is notably superior. Gold trades higher on Russia-Ukraine escalation. Gold, XEU/USD, rallies for the fifth day in a row, making it a clean sweep of green daily candlesticks for the week so far. The precious metal pulls back below $2,700 again during the U.S. session on Friday after the U.S. dollar, USD, gains ground following the release of stronger-than-expected activity data. Overall, however, gold sees gains as inflaming Russia-Ukraine tensions drive renewed safe haven flows. The preliminary U.S. global composite PMI rises to 55.3 in November from 54.1 in October, according to data on Friday. The manufacturing PMI rose to 48.8 in line with expectations, and the services PMI rose to 57.0 from 55.0 previously and beat expectations of 55.3. The data was overall positive, especially when compared to European PMIs, which declined. It further cements the view that interest rates will remain elevated in the U.S. and increases the chances that the Federal Reserve Fed might hold back from cutting interest rates in December. Elevated interest rates are negative for gold as they raise the opportunity cost of holding the non-interest paying asset. The data further strengthens the U.S. dollar, USD, which is underpinned by the anticipation of the Trump government implementing dollar-positive policies in January and recent data evidencing a robust U.S. labor market. Gold rises as Russia threatens United Kingdom. Gold is broadly rallying, however, on the back of increased haven flows after the Russian ambassador for the UK, Andrei Kellen, told Sky News that the UK was now a legitimate target for Russian missile strikes after permitting Ukraine to use its British-made Storm Shadow missiles on Russian territory. The comments mark an escalation in the conflict and come after Russia used intercontinental ballistic missiles in a strike on the Ukrainian city of Dnipro. This was a reprisal for an attack by Ukraine on Russian targets in the Kursk region, using British-made long-range missiles. This follows U.S. President Biden's decision to allow Ukraine to use its U.S.-made ATACMS, Army Tactical Missile System, missiles against targets on Russian soil. Technical analysis, XEU/USD marches higher. Gold extends its march higher on Friday, fulfilling the promise of the bullish, three white soldiers, Japanese candlestick pattern, green rectangle on the chart below. It formed whilst rebounding from last week's lows. The up move is backed by the JBLU Moving Average Convergence Divergence, MACD, indicator crossing above its red signal line on an intraday basis. However, to give a proper signal, the crossover must endure until the day's close. The precious metals short-term trend is bullish, and given the maxim that the trend is your friend, the odds favor a continuation higher. Gold has already punched through the first target to the upside at $2,686, the September 26th high, and now prepares to meet resistance at the next key level of $2,710 at the November 8th swing high. A break above $2,710 would be a very bullish sign, as it would potentially cement the medium-term trend as bullish. This would mean all three major trends, the short, medium and long-term, were in the ascent, giving a green light to a continuation higher. Until the level is broken, however, the precious metal could still arguably be in a downtrend on a medium-term basis, keeping alive downside risks to the outlook. The recovery rally in the gold market is likely to take a breather, Commerzbank. The gold price has also recovered more than half of its losses since the end of October and is once again trading at $2,700 per troy ounce, Commerzbank's commodity analyst Barbara Lambrecht notes. Platinum group metals are cheaper than at the start of the year. In view of the threat of an escalation in the war in Ukraine, gold is in demand as a safe haven. This is also shown by the inflows into ETFs in recent days. The silver price has risen significantly this year in the wake of the gold price and is also trading almost 30% higher than at the beginning of the year. The picture is different for the platinum group metals, which are cheaper than at the beginning of the year. This is another reason why they have catch-up potential for the coming year. In our view, the price of platinum in particular should rise significantly, as the market is likely to be in deficit for the third year in a row in 2025. This will probably be confirmed by the World Platinum Investment Council, which will present an initial forecast for 2025 in its quarterly report next Tuesday. In its medium-term 5-year outlook from September, the WPIC had assumed that supply would increase after declining in the previous 2 years. However, the increase is not expected to be enough to close the gap, as demand will also rise slightly. Swiss gold exports reflect weak demand for gold in Asia, Commerzbank. The Swiss Federal Customs Authority published data on gold exports in October this week, Commerzbank's commodity analyst Carsten Fritsch notes. Gold demand in Western countries is picking up. These revealed very different trends. Deliveries to China were significantly weaker at just 5 tons. Virtually no gold was exported to Hong Kong. On the other hand, there was an increase in exports to India. However, the level in October was still comparatively low at 11.7 tons. Slightly more gold was delivered to the US than in the previous month. However, the inflows of 30 tons into the US-listed gold ETFs reported by the World Gold Council, WGC, in October would have suggested a higher figure than the reported 9.4 tons. Very surprising is the strong increase in Swiss gold exports to the UK to 31.9 tons, although the gold ETFs listed their recorded outflows in October according to the WGC. All in all, the picture of subdued gold demand in Asia is confirmed, while gold demand in Western countries is picking up. Gold price refreshes 2-week high, looks to build on momentum beyond $2,700 mark. Gold price, XEU/USD, hits a fresh 2-week top during the first half of the European session on Friday, with bulls now looking to build on the momentum further beyond the $2,700 mark. This marks the 5th successive day of a positive move and is fueled by the global flight to safety amid persistent geopolitical tensions stemming from the intensifying Russia-Ukraine war. Furthermore, expectations that U.S. President-elect Donald Trump's expansionary policies could reignite inflationary pressures further benefit the commodity's appeal as a hedge against inflation. Meanwhile, higher inflation could limit the scope for the Federal Reserve (Fed) to cut interest rates further. This, along with worries over a possible rise in the U.S. fiscal deficit led by Trump's expansionary plans, remains supportive of elevated U.S. Treasury bond yields and lifts the U.S. dollar, USD, to its highest level since October 2023. Sustained USD buying, however, does little to dent the bullish sentiment surrounding the gold price, which has now reversed last week's heavy losses to a 2-month low and remains on track to register strong weekly gains. Gold price weekly uptrend remains uninterrupted despite elevated U.S. bond yields and stronger USD. Mounting Russia-Ukraine tensions continue to drive haven flows and assist the gold price to scale higher for the 5th straight day on Friday, despite a bullish U.S. dollar. Russian forces fired a new intermediate-range ballistic missile at Ukraine in response to the latter's use of U.S. and UK-made missiles in attacks on targets in Russia. The USD index, which tracks the greenback against a basket of currencies, advanced to its highest level since October 2023 amid bets for a less dovish Federal Reserve. Investors remain concerned that U.S. President-elect Donald Trump's policies could reignite inflation and force the Fed to take a slower course in its rate cut path. A slew of influential FOMC members, including Fed Chair Jerome Powell, recently warned about inflationary shocks and cautioned on further policy easing. According to the CME Group's FedWatch tool, traders are pricing around a 55% chance that the Fed will lower borrowing costs by 25 basis points in December. Meanwhile, Chicago Fed President Austin Goolsbee said that the inflation is on its way down to 2% and that it may make sense to slow the pace of interest rate cuts. Adding to this, New York Fed President John Williams noted that the labor market is in balance and not providing any upward pressure on inflation. On the economic data front, U.S. weekly initial jobless claims dropped by 6K last week to 213K, or a 7-month low against expectations for a reading of 220K. U.S. existing home sales rebounded sharply after September's slump to the lowest since October 2010 and posted the first annual gain since mid-2021 in October. The Philly Fed Manufacturing Index indicated that manufacturing activity in the Philadelphia region unexpectedly contracted in November and fell to -5.5 from +10.3. Friday's release of flash PMIs will be looked for a fresh insight into the health of the global economy, which, in turn, should provide a fresh impetus to the XAU/USD. Gold price sustained strength beyond $2,700 could be seen as fresh trigger for bullish traders. The overnight breakout above the $2,665 confluence, comprising the 50% retracement level of the recent pullback from the all-time peak and the 100-period simple moving average SMA on the 4-hour chart, was seen as a key trigger for bulls. Adding to this, technical indicators on the daily chart have again started gaining positive traction and support prospects for a further appreciating move for the gold price. Hence, some follow-through strength beyond the $2,700 mark, towards the $2,710 to $2,711 supply zone, looks like a distinct possibility. Acceptance above the said barriers will reaffirm the positive bias and lift the XAU/USD towards the next relevant hurdle near the $2,736 to $2,737 region. On the flip side, the $2,665 confluence hurdle breakpoint might now protect the immediate downside ahead of the $2,635 to $2,634 area, or the 38.2% Fibonacci retracement level. This is followed by the $2,622 to $2,620 intermediate support and the $2,600 round figure. A convincing break below the latter could make the gold price vulnerable to accelerate the fall towards the 100-day SMA, around the $2,560 region, en route to last week's swing low, around the $2,537 to $2,536 area. Failure to defend the said support levels will shift the bias back in favor of bearish traders and set the stage for deeper losses. India gold price today, gold rises, according to FX Street data. Gold prices rose in India on Friday, according to data compiled by FX Street. The price for gold stood at 7,293.89 Indian rupees (INR) per gram, up compared with the 7,257.32 Indian rupees it cost on Thursday. The price for gold increased to 85,074.45 Indian rupees per tola from 84,647.97 Indian rupees per tola a day earlier. FX Street calculates gold prices in India by adapting international prices, US dollar to Indian rupee, to the local currency and measurement units. Prices are updated daily based on the market rates taken at the time of publication. Prices are just for reference and local rates could diverge slightly.